FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And of course, welcome back to Trading with Market Makers 2024 week 15. So as we get into week 15, we've talked pretty much about everything with the strategy so far. We even talked about swing trading last week. So now let's go into the individual setups themselves and let's talk about how many setups could you potentially expect to get if you were to trade this specific strategy. Have you ever thought about how many setups could it produce? How many setups would be winners? How many setups would be losers? Well, let's get into it. By the way, if you're new to the channel and you're just joining us in week 15, do me a favor, go back to week 1, watch all of the entire strategy for free here on YouTube. Just go into the playlist FXN Mentoring 2024 and start from week 1 so you can get caught up. If you are new to the channel, hi, my name is Mark and I've been trading since 2011 and I'm just here showing my strategy. Hopefully any part of the strategy can actually help you become a better trader. So without further ado, let's get this video started and let's go right over to the charts. All right guys, so we're looking at EURUSD obviously, so let's go right into a couple of weeks and let's figure out how many setups could we have gotten per week on this specific pair. This pair, obviously one of the most traded pairs in the entire world for EURUSD. So very popular pair. So let's see if you just trade, let's say EURUSD, what would the outcome be on a week to week basis? So let's go over the last couple of weeks. I'm going to show you what setups would be available, why they were available, and most importantly, entry, stops, take profits, and also good trades and bad trades, because obviously they're not all going to win. There's going to be some losers, and we'll talk about that and we'll break all these down. So let's just get right into EURUSD. All right, so here we have the beginning of the week here. Obviously we have peak formation high. As far as the confirmations and everything like that, we actually don't get the confirmation for peak formation high until Wednesday of this week. So we're going to start looking at specifically Wednesday. All right, so here we have Wednesday, the first day that we can actually trade and start looking for sells after the new peak formation high was formed. So what do we notice here that's available for trade during the London session? Well, the first trade that we have would be a type 4 pattern right here, where the market actually drops immediately after the Asian session, comes back and touches the bottom of the Asian range right here, and then continues on. So this is a trade setup right here. Now, as far as the entry goes for this setup, the entry is going to be after this big red candle. Now, the good thing about this specific setup is that we actually get a pullback on the next candle. That pullback is basically the entry. Now, typically on these type of, or really any kind of setup, I like to go towards pretty close to at least hit 50% of the actual candle. That would be the best. But you know, sometimes obviously it's not going to go 50%, it could go 40%, it could go 60%. We don't know how far the pullback is going to be. So in this case here, the pullback is going to be the entry. So obviously anywhere in here is going to be perfectly fine. The stop goes above, so anywhere around here, it could be anywhere from 2 to 3 pips above the closest high of where you're going from. And then obviously we're just going for 2 to 1 risk to reward ratio. Now, what could we use as far as a price target besides 2 to 1? Well, if you look to the left, okay, where could we look at for price action to go? Well, if we're looking to the left here, obviously all of this right here, this big candle was pretty much news, okay? So that was caused by news. So the next best place for price action to go is very likely going to be somewhere in this area here. And then obviously you could see where price action does go perfectly to that area. So that area could be used as a potential take profit. Now, to make it easy on yourself, if you just go 2 to 1, you can go here and you'd easily get 2 to 1, almost 30 pips on this, if you're risking 13.3 pips on this trade. Now, in the US session, was there anything to trade? There was a reversal trade. So the reversal trade is basically right here, where you're coming back to the 50 EMA. Okay, so that would have been a reversal trade. The important part about this reversal trade is that we have the pattern right here that is created, and then the second leg of that pattern is created by a railroad track, which is great, so you can actually take the trade right away. So the setup itself would be something like this, where you'd enter right after the railroad track. If you're more conservative, you could wait to see if you get a pullback on the next candle, but as you can see, it doesn't always happen on every single time. So in this case though, you still get a 2-to-1 to go to the 50 EMA. Now the stop loss on this, because price did not go back down to this bottom here to take these lows again, you can put the low, or the you could put your stop loss below the railroad track here. Okay, now if price were to obviously come back down here on the second leg when it's created, then obviously your stop loss would go below the low here. But because it did not, because the market didn't want to come back down and grab any more orders from here, and it gave us an immediate railroad track to go back up again, you could use this as a place so you can put your stop loss. So if you're wrong about this trade, you're wrong hopefully on the next candle, and you get taken out right away and it's done. So the very next day, Thursday, we do have a type 2 pattern that happens. This is actually a type 2 out of the edge, meaning that the first leg is actually created inside of the Asian session. So for me, what I'm looking for out of this is the pattern right here. Is there's the first leg, comes down, second leg, and then comes down again. So that's the pattern that I'm looking at. The entry for me is going to be basically this candle here, because if this were to happen 2 candles before, right? So basically if this right here was not inside of this box, then for me it's not a trade. Okay, for me the second leg has to be inside of the London box. All right, so the entry for me is basically going to be after this red candle here. You have a second leg star pattern here. You do get a little bit of a pullback, but it's not really that big, so it doesn't make that really much of a difference. Okay, now as far as stop losses go, you can obviously go 2 or 3 pips above the closest high, which is this wick. Also notice the wick itself actually goes above the Asian range here, so it does grab orders as well. And then from there you could basically go 2-to-1 again. If you don't know where to go, just look to the left, where basically we could go towards any of these lows here as potential targets, and you can see immediately it does go to those lows. So that's one trade. And then in the New York session, we could have had a second trade if we would have gotten a better setup, essentially, because going into the New York session here, there is no continuation trade setup because it didn't pull back to the 50 here like I would like it to. So it's not a continuation trade that I would even thought about taking or anything like that. There is a possibility here for a reversal as well. The problem with this particular reversal and why I would have not taken it or thought about it is because of this. So you see how this red candle here is pretty big. The next candle here doesn't cover at least 75% of the previous candle. Okay, so for me, what I'm looking for is if I'm going to take a reversal back up to the 50 like we did back here in this trade the previous day, we want to have some type of entry that allows us to get a possible 2-to-1, right, back to the 50. And so if we can't get a 2-to-1 back to the 50, then the trade is probably not worth taking, because if it just goes back to the 50 and you can't get 2-to-1, then what are we doing with that particular setup? So in this case here, this would not have been a trade setup that I would have liked to trade. Now, even if we got a railroad track, basically, you know, the same kind of setup here, and the issue is here as well that obviously you could see, but also you could see that there's no way that this would give you 2-to-1 with having your stop loss all the way down here. So that automatically, the fact that I can't get a 2-to-1 risk to reward ratio, it's just not a trade that I'm willing to take. So that's one thing. The second thing is there is no second leg pattern to trade here. So there's could have been, what we're looking for here is if this right here is the pattern, let's say, there is no second leg pattern. Now, some of you could have seen it like this. You could have seen where the first leg is actually here, and it does something like this. This is not what we're looking for, okay? We are looking for a potential, this would have been like a multi-session because the first leg was here, second leg was here. Same thing here. If we go back to this particular moment in time, okay, at this particular moment in time, you could have thought, man, this could be a really good potential setup for a multi-session reversal back to the 50. Well, the problem with that, again, is the big candle, because this is a pretty massive candle. In order to get into this trade, you're going to need either a railroad track or a star pattern to be created here. And even if it does get created, you're not going to be able to take advantage of it and go 2-to-1 unless you get a massive pullback. As you can see, it doesn't even get you to 1-to-1 risk reward ratio. So these are the things that I'm looking at every time for setup, especially for reversal setups back to the 50 during the US session. If it doesn't make sense to get a 2-to-1 back to the 50, it's automatically, for me, disqualified for a trade setup. Okay, I'll still watch it because there is a possibility that you could get a massive pullback that allows you to get, let's say, an entry like somewhere down here. And if you were to get an entry down here, then you're looking at good risk to reward ratio, right? But if you can't get that, then to me, it's just not worth it because it doesn't meet my requirements for the trade setup. Now, Friday, keep in mind, we're still looking for sells because we're still coming off that peak formation high. So we're still looking for sells, okay? Now, for me, during London session, there is nothing for me here to trade, okay? There's nothing at all here that I would think of as a pattern or anything at all to trade. So during London, there's nothing. During New York session, again, nothing. The EMA is a 50s running straight through price. A lot of that time, most of the time when the EMAs run straight through price, it's a lot of just consolidation. So for me, this Friday here would have been a no trade Friday. There's nothing here to trade. So it's just not worth it. Now going into Monday, okay, we're still looking for sells because we're still coming off that peak formation high. And so as of right now for London session, there would have been a potential for a trade setup here. Let me go back to it so I could show you. Now, obviously, when price action breaks above, if I'm looking for sells and price action breaks above the Asian session during the London, I'm looking for type 1. It's the only thing that I'm looking for to look for trade setup, okay, is a type 1. All right, so in this case here, there is a potential for a type 1 setup, and that would have been not here, but actually right here. This would have been the first leg coming down and then a second leg to go down. Okay, so a trade setup like this. Okay, now for me, I don't count this as a first leg. That's just not what I would count here. This is what I'm counting as a first leg coming back, and then here's the second leg. Now everything is actually here for a setup. So the entry here would be after this candle here. This candle basically allows us to get what I like to call a 3-star doji. So this candle here and the 3 dojis and the red candle for me make a 3-star doji, and then the next candle here, that massive pullback, that is your entry. Anywhere on that pullback can be your entry. Now obviously the stop loss, because again, same rule as before, when we created the second leg, we didn't go back up to take out the highs again. So because we didn't take out the highs, you can put your stop loss here above this high. You don't have to go all the way above here. Because if you're wrong, that's okay to be wrong. You could just be taken out right away. So again, 2 to 3 pips above the high here, perfectly fine. And then 2-to-1 risk to reward ratio basically just means you got to go back to the middle of the range. Okay, now I want you to pay attention to essentially what happens here. As we're getting along here, we could see where 1, 1, 2, 3, 4, 5, 6 candles deep. After this candle here, we're not in substantial profit. Here is where the second part of the rules come in. So if you are a conservative trader and you want to have very conservative rules, you can simply use the 6 candle rule, which is basically allows you to get out of a trade where you're not in substantial profit after 6 candles. If you think about the concept here that this is the second leg and you're just going down, right, to the middle of the range, well, if you're not there within 6 candles, or if you're not in substantial profit within 6 candles, then there's something wrong with the setup that you selected to trade. And so at that point, you would need to go ahead and start to think about, okay, what am I doing, or what should I do to get out of this trade, or to potentially just cut my losses with the trade? And so hence the 6 candle rule was created. So basically, is after 6 candles, if you're not in substantial profit, you could just close out the trade and, you know, take what little profit you have, or you could move your stop loss to break even. That way, no matter what, you're not losing the trade, and it just ends up being a break even trade. In this case, if you were a conservative trader and after the 6 candles you would have gotten out, you may have gotten out with maybe 1 or 2 pips of profit or so, you know, yeah, like 5 pips of profit. Okay, if you would have moved it to break even, obviously this candle here would have taken you out, and it would have been a break even trade for you. Also, keep in mind, there are traders that, you know what, they just set it and forget it, right? And in this case, eventually would have been taken out. So keep in mind, every trader is different. It's important to understand who you are as a trader individually, so you can craft the actual strategy of how you're going to get out of trades if they don't work out, because they're not going to all work out, obviously. And so you need to have an exit strategy, and depending upon who you are as a trader will depend on what type of exit strategy you have in your trading plan. All right, so this is Tuesday, and we're still looking for sells because we don't have yet a confirmation of a peak formation low yet. We're getting into that area, but not yet. So here we have a beautiful type 3 pattern. Okay, so you can see here price comes out of the Asian session from the bottom, so right to the middle of the range, and then you see right here we get a star pattern with these 3 candles. So that star pattern there with the 50 holding price and price in the middle of the range, that is what you want to see for a type 3 setup. The entry is basically the very next candle. So it could be a setup like this, 2 to 1. Again, if you want to go longer, you just look to the left. Where's price action? Price action is the closest structure is right here, and that could be your take profit if you want to go further than 2 to 1. That'll basically give you almost 3.5 to 1 risk to reward ratio on it. Obviously, you could see it goes much more than that. Okay, so that would have been the setup for the London session. In the US session, there's clearly a pattern here that's a reversal. Okay, now the problem with this particular pattern, which is right here, first leg, second leg, and then going back up, is that the second leg is obviously not inside of the box, and you don't have a good entry because you don't have a second leg pattern. And what I mean by a second leg pattern is you don't have a railroad track star pattern or a cord of wood. Okay, again, if you don't know what these are, go back to I think week 3 or 4. Just go back into the videos for the FXM mentoring 2024 so you can get all that. But because the second leg doesn't have the star pattern, railroad track, or a cord of wood, then for me, I would need to wait for a break or a close above the 13 EMA. And so obviously you could see this big bullish candle is what breaks above the 13 EMA. As soon as I see that, okay, this is probably not going to be a viable trade for me for obvious reasons, because you would need a massive pullback in order to have a viable trade option for me. So what I mean by that is, you know, if you were to take a trade below let's say halfway down on the pullback here, you're still risking about 11 pips, and you need to go to get 2 to 1, basically back up to the very top of the Asian range. Now, price could very likely go there. That's perfectly fine, but you want to obviously lower as much risk as you can possible. Okay, and so for me, the first area that I would be looking for price to go is just back up to where it was before, these two areas here. The first being here where the type 3 was in London. Okay, as you can see, eventually that's where literally price goes to. Okay, that's the first price of structure, so that's where I would want to see price go to. And so because you don't get a massive pullback, then essentially it leaves you with the trade setup that is just not ideal for me specifically to take. You can see if you were to take it, even on this generous pullback here, you're not going to get a 2 to 1. You'd have to go pretty high up to get a 2 to 1. So you can see how much of a difference the setups look like when you do have a decent pullback versus not a decent pullback. So all those things being, keeping all that in mind, the immediate part of having this big candle here and knowing that if I don't get a major pullback here from that candle, then to me, it's just not a trade worth taking. And so in this case here, it would not have been a trade worth taking for me specifically. All right, so now we're getting into Wednesday. Wednesday basically is a no trade day because that's the day that we actually get the crossover to confirm a new peak formation low. So after Wednesday would be, obviously the next day to trade. So no trades on Wednesday, and then we're going into Thursday. And now that we have a peak formation low, we are looking for essentially buys. So here we go on Thursday, and you can clearly see we have a setup on Thursday. So Thursday, the setup is basically a type 3 pattern. So the pattern is basically this right here, and you're just going up. So you can clearly see we do have a pattern to trade here. This is a star pattern here. The setup itself, anywhere in this pullback after the star pattern will be your entry, and then obviously the low could go 2 to 3 pips below the closest low here, and then you're just literally going 2 to 1. Okay, there's 2 to 1 there. Now obviously if you look to the left, because we're coming from a peak formation high down, then you're probably gonna have to look further back into the week to look at the major pullbacks. Now what you could do is if you go up to, let's say, a 1 hour time frame, if you have a 1 hour time frame, you could simply just look at the major pullbacks that price did the previous week to help you with where price is likely to go. So we have, obviously pullbacks here, right? Because we're already up here, obviously this is going to be the next major pullback. So can't really use that unless you're willing to hold the trade for quite some time. This is going to be a pretty long trade here. We'd be looking pretty close to about 50 pips or so, or almost a 7.5 to 1 risk to reward ratio if we're looking to the left for any kind of structure here, which we don't have obviously. But the trade itself is still viable, it's still there. You'd still get well over 2 to 1 risk to reward ratio on this trade. Just going right here is a 2 to 1 risk to reward ratio. Now as far as the New York session, there is no trade set up obviously. The reasoning behind it is obviously price is pretty close to the 50 EMA for a reversal, and so obviously you wouldn't be able to get a 2 to 1 with this massive railroad track here. Even on the pullback here, you're still not getting a 2 to 1 risk reward ratio. So on the New York session, there is no trade setup at all. Now Friday, again, looking for more buys still because we're still coming off that peak formation low. So during the London session, there was a possibility for type 3 setup here, but again, the major problem is that with this particular 2 candle, this is not a railroad track. Okay, this blue candle does not cover at least 70% of the previous candle, 75%. So because it doesn't do that, then it is not going to be a railroad track for me, and essentially it's not a trade that I would take. Everything about it though looks great. We're bouncing off the middle of the range, we're bouncing off the 50, we're looking for buys obviously because we're still coming off peak formation low, but essentially this right here doesn't give us the pattern that we want in order to trade it. And then obviously this right here is going to be news. During the New York session, I don't trade during news days anyway, so it's not anything that I would actually trade. So that's for a second week there. So going into Monday, we got our confirmation of a new peak formation high, and then obviously now we're looking for sells. As you can see, during the London session, there is nothing to trade during London. During the US session, we did get a potential opportunity here for, again, a New York reversal back to the 50. Now the question is, does it meet the criteria for going 2 to 1 back to the 50? Well, let's go ahead and take a look at it here, because if we were to pay attention to this setup during this time period here, then you're looking at this railroad track as being the second leg. So the pattern itself would essentially be something like this. Okay, that could be your pattern. Some other people might see this like this. Either way is perfectly fine. That's not a, it's not a problem for either way that you look at it. Just obviously depends on what time you're looking at it and what you see as a trader, because every trader might look like something different. But in this case here, this railroad track would be the entry with the pullback here. So if we were to enter in on that pullback, could we get a 2 to 1 going to the 50? If you can get a 2 to 1 going to the 50, then obviously that would be a trade. But if you can't get a 2 to 1, then it's not. In this case, it is actually a trade because you can get 2 to 1 going to the 50. Okay, and even if you, let's say, missed it, there was another opportunity a couple candles later, and that almost gave you a 2 to 1 as well. Okay, so there is a trade set up there for a reversal. Now keep in mind that during the New York session, obviously you can look for reversals back to the 50, even if you're looking for long-term sells, because we know price action likes to go back to the 50 at the end of the session, especially after a big move from the London session. So going into Tuesday now, again, still looking for sells because we're coming off peak formation high. During the London session, there is a pattern here, right? That's a trade set up here. Now, in this case here, we do have a railroad track on the second leg because it is covering 70% or more of that blue candle, and we also get a pullback. So here is the trade setup itself. Again, it's not the prettiest, but it is a trade setup. Okay, so if we're going 2 to 1, there is your 2 to 1 trade setup. Okay, ideally, obviously, if you're just looking to the left, the closest structure is going to be the Asian low here. You could aim towards that. Now, looking at how this played out, if you're looking at it from a perspective of a conservative trader, you're in 1, 2, 3, 4, 5, 6. You're not in substantial profit at this particular time. You're only up 5 pips or so. So a lot of times trader might want to exit out of the position and cut their losses. Okay, if you're a trader that sets it and forgets it, then obviously it would have ended up winning for you. So again, everything depends on the type of trader that you are. If you're the type of trader that says, hey, I'm in 6 candles, is not a substantial profit, let me protect myself, put it to break even, and then if it takes me out, it takes me out, then it would have taken you out here on this candle, on the wick of this candle. So even if you're a trader that's like, hey, I'm going to put it, I'm going to move my stop loss to break even to protect myself if I'm not in substantial profit, then this candle here, this wick of the red candle right here, would have taken you out and then, you know, it would have been just a break-even trade for you. So again, different scenarios will benefit a different trader. So before, it would have benefited, you know, it would not have benefited the trader that just sets it and forgets it. In this case, it would have benefited that trader because it would have played out in their favor over the long term of the day. So again, every day is going to be different. This is why it's especially important to be able to identify who you are as a trader and just stick to those rules. So moving on to the next day, Wednesday, still looking again for sales. We don't have the confirmation yet for the peak formation low, so we are still looking for sell. If you look at what we have here during the London session, very easily we could have been in a situation where we thought this right here was a trade setup. I would have thought it was a trade setup. It would have met pretty much all of my rules. It would have been a type 2 trade, again, out of the edge. So this right here would have been the second leg for me. And then the entry here would have been going down after the pullback here. Here's the trade setup. 2 to 1, and then go from there. Now, obviously, you could start, you already know what happens here, where it just moves sideways, 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 doesn't do much of anything. So again, you're in 1, 2, 3, 4, 5, 6. On the 6th candle, you got to make a decision. Okay, we're definitely not in any kind of profit. We're basically right at break even. Do I cut the loss? Okay, and just get out for the day, leave it alone, or you can possibly move your stop loss. You really can't move your stop loss because it's already at break even. So you're essentially saying, I'm just either going to get out or leave it. Obviously, you know that if you just leave it, it would have taken you out regardless right here anyways. So that's perfectly fine. This would have been a loss if you're the type of trader that says, hey, set it and forget it. It would end up being a loss. If you're a trader that after 6 candles, you're conservative, you cut the losses and you're done, then, you know, it would have been basically a break-even trade for you or a slight loss. So this is a trade example again that it would have either been a break-even or a loss for you. During the New York session, obviously huge candle here from news. Again, not something that I would be interested in trading at all. So Thursday, as you can see, is when we get the confirmation of a new peak formation low. That tells us we are looking for buys. And so that essentially that's going to lead us into Friday. All right, so here's Friday. Clearly there is a trade set up here. It is a type 2 pattern with a railroad track here. So here is the trade setup. You're going along 2 pips below the low, and then obviously you're going 2 to 1. This one gives you almost a 2.25 to 1 on the trade scenario here. So there is your trade. Okay, now if you look at it from a line chart, you can clearly see the W there. The reason I know that this is going to look like a W, guys, is because of these candle formations here that I see. When you see them, even if you go down, let's say, to a 5-minute time frame, you'll see very clearly a W. Okay, you'll see it very clearly, a W there. So if going down to the 5-minute time frame helps you to see it more clearly, go ahead and do that. If you can use the line chart, obviously, to help you do that as well. So either way, but that is a trade for you on Friday. During the New York session, there was another opportunity as well for a multi-session reversal. But again, the question becomes very simple. Can you make it to the 50 EMA from this railroad track? Well, if we go back to what we were looking at that particular moment in time, that's what you had there. You did get a pullback, which is fantastic. And so you can already see that you would not have made a 2-to-1 risk-reward ratio. So for me, not something that I would take. Okay, if you want to take it, that's fine. But for me, just doesn't meet all your rules. It would have went 2-to-1 anyways for you. That's perfect. That's great. Fantastic. But again, for me, I'm looking for very specific things. And if they're not there, I just simply won't take the trade. And that's just, you know, I've been doing that for so many years now that it's just ingrained into my brain as part of literally my programming to my brain for trading anything. especially reversals. If I cannot get a 2-to-1 back to the 50, then to me it's just not a trade I'm willing to risk any of my money for. All right, so that is, I believe, what, 3 weeks that we just went through. 3 weeks of trades. Okay, what did we end up getting? How many trades could you have caught in 3 weeks on just one pair? Again, this is literally just one pair. This is Euro USD, the most popular pair to trade in the world. So 12 trades in 3 weeks. Now, obviously, we're not counting the weekends. We're basically counting Monday through Friday. So that's essentially 15 days. So pretty much one trade a day, 1.25 trades a day is what you would average if you were to trade Euro USD. That's what we averaged the last 3 weeks. Okay. Obviously, that's going to differ from time to time and from pair to pair. But just to give you an example of what could be possible if you're just trading one pair, one setup a day is the average. And that makes sense because if you're trading London session or if you're trading New York session, the possibility is 2 trade setups, right? So the fact that you're at least getting one almost every day, pretty good. Now, obviously, every pair is going to be different. Pound USD may be the same. AUD CAD may be completely different. Keep that in mind, but at least you know that if you went to Euro USD over the last 3 weeks, at least one trade setup a day you could have gotten on that pair. So again, I just picked the most popular pair because I think that gives you a really good area to work with. But the more exotic pairs, maybe less. I don't know. You're gonna have to do your own back testing on it. But at least you know now about what you're gonna get from the most traded pair on the planet. All right, guys. So I hope this video brought you some value. I hope you learned a lot from the actual entries. Why I would have taken some, why I wouldn't have taken others. Most importantly, also where to put stops, where to put take profits, what to look for, why certain things I wouldn't take versus others. So I hope this brought you a little bit more of an insight per each detail of each individual trade for every single day. Guys, if you could do me a favor, like the video, share the content, subscribe to the channel. If you have any questions below about different setups, or if you have different rules for your own individual setups, whether it be type 1, 2, 3, or 4, continuation trades, reversals, let me know in the comments. Let's have a discussion. And until the next time, guys, have a great rest of the trading week.